Back, you're watching us here on Halftime Report, and it's time for an extremely special and an exclusive conversation that we're having with Mark Mobius, who's the founder at Mobius Capital Partners, joining us now. Mark, always a pleasure speaking with you, and it's the first time that you're speaking to us post the announcement of the union budget as well. So just wanted your thoughts on where you are positioned on India right now. You have been a long-term India lover. A lot has happened. We've seen, the budget being announced, the markets being in a bit of a range. At the same time, the Adani crisis unfolding, so to say, as well. With all these things, what are your thoughts?
Well, we're still very bullish on India. As you know, I've been a fan of India for quite a long time, but that excitement that I have about India has actually increased. As a matter of fact, my partner, Carlos Hardenberg, is in India right now, looking at companies and looking for bargains. And the Adani thing is not really very important from our point of view in terms of looking at India, because first of all, that situation was not a very serious problem in terms of corporate governance. Yes, they could have done a better job in corporate governance, but generally speaking, a lot of the information that was revealed by Hindenburg was pretty well known by the market. So, in addition, the fact that it's such a big company gave the world a notice that India has large companies and companies that are able to raise an incredible amount of capital. So, on the one side, it's quite a positive message for India, although maybe not the right one in the long term, but in the short term, I think it's been a good one. But it also gives us a warning that we've got to look at companies that have too much debt. And in our case, we will not touch a company that has a debt equity of over 50%. So we're still very positive. And we're finding lots of good bargains.
Okay. Mark, hi, welcome to the show. In that context, then, what is your allocation towards India at this point in time, vis-a-vis, say, a quarter ago? And if you are looking at the mandate of no debt, what might your sector allocation be currently within the Indian market?
Yes, right now in our funds, the largest allocation is Taiwan, but we are actually reducing that in favor of India. So you're going to see India coming up. India is the second largest allocation in our portfolio. And the strategy, as I said, is to look for companies with a high return on capital, over 20%, and a debt equity of less than 50%, and of course, earnings growth. And we're finding the best opportunities in software companies to begin with, and in companies that are in the medical area, particularly medical testing, and finally in companies that do products that can contribute to the infrastructure requirements of India. Because, as you know, India is going to be accelerating the infrastructure spending, and we want to be participating in that.
Okay, that's interesting. I want to take that discussion forward on software companies. Mark, a pleasure having you on the show. I noticed that in your sectoral breakdown, you've actually reduced your weightage on IT. It's now at a little over 50% compared to, I think, about 58% in early Jan. Is that a fair way to look at it, that you're perhaps a bit cautious on the Indian tech companies after what's happened? And of course, there is the possibility of an impending recession globally as well. How would you approach IT now in the scheme of things?
No, we're still very excited about IT in India. And we, of course, the portfolio weightings will vary according to the prices of the companies. If the prices go down, of course, the allocation looks like it's being reduced. But in fact, we are continuing to hold our IT companies and look for better opportunities. Further down the line, I believe that India is going to become an important producer of semiconductors, and all the companies related to semiconductors will be interesting. Semiconductor testing, semiconductor materials, et cetera, but that's further down the line. Right now, it's really software.
I'm looking at the three macros that you spoke about: software, healthcare, diagnostics, as well as stocks related to infra plays. And this ties in with your three largest individual stock holdings as well. You have Persistent Systems, you have Metropolis Labs, and you have Apollo Tubes as well. Metropolis, we had the management join us yesterday, and they said that, while their COVID testing was down 88% year on year, X of all the COVID-related and non-linear businesses, they are targeting 15% growth going forward, with margins being maintained as well. So after the dip that you've seen, does it tempt you to buy a little more of Metropolis?
Yes, it does. It's really interesting to note that many people were looking at the COVID testing and thinking, oh, that's everything. And therefore, when that's over, Metropolis and other testing companies will be in trouble. And of course, that was not true. And you can see how the stock has been recovering as a result of people realizing that, hey, these testing companies were not only about COVID, but about many other things. And I believe going forward, that incredible growth in earnings will justify us buying more of Metropolis and looking at other such opportunities.
Okay. Well, Mark, we have you at an opportune time because we do have the January CPI data from the US, which is out this evening. And the street is anticipating that if it's a flat number on a month-on-month basis, then there could be some amount of trepidation which could emerge in the US markets. What is your reading in terms of how important this piece of data is? What are you expecting from the Fed henceforth?
Well, first of all, I think it's important to note that the interest rate continuum and also inflation numbers really do not correlate very highly with the stock market. Sometimes interest rates go up, inflation goes up, and the market does well. And sometimes the opposite. And of course, recently, we've seen the opposite happening. So that's the first thing. At the end of the day, the Fed is really in trouble because on the one side, with an election coming up, and you must remember that the Fed is a political organization. The people that are appointed to the Fed have political ties. So they don't want the current administration to be in trouble with a bad economy. And therefore, they're going to be very, very cautious about raising interest rates too aggressively. Of course, they want to get down to that 2% number, but they're far away from that. And they're just hoping that that CPI number at least moves sideways and they can have time until the election to keep the economy on even keel.
But do you get a sense, Mark, that this could be a year of subpar returns for global equities, including emerging markets like India? I ask that because we are still in a rate hiking cycle. I mean, no one knows which way it's going to go. And, you have a growth slowdown coming through as well, an impending recession. At such a time, do you think equities could take a back seat, perhaps more money moving into other asset classes like gold, debt, etc.? And what's your own prognosis on how things could shape up for emerging markets as well?
Well, as you know, gold is doing quite well because of the buying by China and Russia, probably in anticipation of trying to establish another currency that would be competing with the U.S. as a reserve currency. But at the end of the day, it's equities, and now it's emerging markets equities. As you know, emerging markets are now beginning to outperform the U.S. market and developed markets generally. And we believe that's going to continue going forward. More and more people are beginning to realize these emerging countries like India are doing very, very well. They're growing at an incredible pace. And because of the Ukraine war, they're getting Russian oil and gas cheap. And of course, that's very positive for many of these countries, particularly India, who are importing their fuel and energy. So I think it's the year of emerging markets, and a lot of investors in America who are scared about the U.S. market are beginning to realize that.
What do you see as the potential risk to equities around the world and emerging markets, India in particular? And were those risks to play out, what is the potential downside that you foresee?
Well, the big risk in Asia, in East Asia, you're talking about Taiwan, Korea, and those countries, is something happening in Taiwan with China trying to take over Taiwan in a military effort. That is a huge, huge risk. I'm not predicting that something will happen tomorrow, but that is a big risk. And of course, in that case, India begins to look very, very safe. It's far away from that kind of conflict. And in fact, India would probably benefit from such an unfortunate situation. So that's one of the big problems facing us. And then globally, another problem is the entire internet global telecommunications system. A breakdown as a result of hackers and a result of crypto hacking taking place could be a real problem going forward. But that's a global phenomenon that would affect everyone.
Okay, Mark, just a quick question from my end, and the last one. The Adani issue, you said it's not that critical from a larger context, but are you worried about a spillover that it could have on the banking and financial space? Is that something which could be a concern?
Oh, definitely. It's something of great concern. And that's the reason why we've been very, very cautious about banking stocks generally, because we believe that probably a lot of things on their books that would create, bad numbers for the banks. But at the end of the day, it all depends on how fast Adani can move up and raise capital. At the end of the day, they have to raise equity in order to help pay off those debts, those bank debts.
Okay. Well, Mark, it was a pleasure speaking with you. Thank you so much for joining us. And it's great to hear that you're still very bullish on India despite all the challenges that we've seen. It's music to the ears of Indian investors for sure. Hope to speak to you again very soon.
Thank you.
All right, that's Mark Mobius saying that they're looking for good bargains in India, and software and medical testing is something that they are excited about. In fact, they're quite excited about tech companies and the fall that they've seen recently, looking to buy over there. Let's slip into a short break. On the other side, a commodity segment will bring you excerpts of a conversation with Ranjit Rath, the chairman and MD of Oil India. Stay tuned.